In 1911, Winston Churchill, the newly appointed First Lord of the Admiralty, decided to convert the British Navy from coal to oil. This decision would profoundly shape the 20th century, elevating oil to the top of the energy matrix. But oil's ascendance hasn't come cheap. From war to global climate change, oil's usage has exacted a terrible price. This is why a new chapter of energy innovation is beginning, and why investors need to pay attention to what's coming right around the corner. One of the men helping to guide both the intellectual and investing framework of this new world is Gianni Kovacevic. A self-described realistic environmentalist, he's the author of My Electrician Drives a Porsche, Investing in the Rise of the New Spending Class. In it, he describes how themes such as shifting demographics and cleaner energy will be the dominant investing trends for decades to come, with a special focus on how copper will be the commodity that benefits the most from these revolutionary changes. Gianni has put this thesis to work with Copperbank Resource Corp., a company created to consolidate prospective copper assets in low-risk jurisdictions. Currently, Copperbank holds 3 projects: Contact, located in Nevada, and Pyramid and San Diego Bay projects, both in Alaska. Recently, CEO.CA founder Tommy Humphries had the opportunity to speak with Gianni about Copperbank and the promise copper holds for investors.
The commodity that wins the marathon is going to be copper. And you can articulate why over a long period of time. I think you've seen some of the talks I've given over 20 minutes or 40 minutes. But in a nutshell, when we decarbonize the energy mix, it means electricity. Rule of thumb, it takes between 4 and 5 times more copper per megawatt of utility, the way we create, transfer, and utilize modern energy, or as some people call it, green energy or clean energies. And Don Cox would always tell everyone, never invest in the story on page 1. That's the efficient market. Invest in the story on page 16 that's headed to page 1. I firmly believe, because of overwhelming fundamentals, that copper is going to have a tremendous sort of the next 2 to 5 years. And I'll just give you anecdotal information. The oil industry, technology is not the friend of that industry. We have to start asking the question, when will we enter terminal decline? In my opinion, we are never going to have, say, 25 or 30% of new demand in oil markets. The same can be said for coal. So when you look down the food chain of commodities, conclusively, copper as an industry is going to have 30, 40, 50% new demand, in my opinion, in the next sort of 5 to 15 years.
And that's because copper makes wiring, conducts electricity. Mostly it's the electricity play, right?
It's all electricity. Oil is energy. Energy without fossil fuels is electricity, and that electricity demands copper 4 or 5 or 6, as much as 10 times more per megawatt of utility, 10 times more when you're creating a wind energy, for example, offshore.
There is no clean energy without it.
That's correct. It's the Achilles heel of clean and modern energy. Scientists have said that by adopting high-efficiency energy systems, we can reduce CO2 emissions by 1.25 gigatons. So let me translate that for you. Basically, that's like taking 500 million cars off the road. What does it mean to adopt high-efficiency energy systems? Remember, I have a background in electrical studies, so if you cut all this stuff in half, I understand how it works. What they're talking about is having more sophisticated and more energy-efficient motors, transformers, microgrid, to stop transferring energy in fossil fuels. By that I mean pipeline and ships and things, and railroads and things like that. All these things are intensive users of copper. How do you make a motor more efficient? Well, you use a copper rotor. How do you make a transformer more efficient? You don't use aluminum windings, you use copper windings. Across the board, the solution for high efficiency energy systems is copper. And my friends at the Copper Alliance, they do a ton of great work trying to articulate that to industry, where people can adopt, not go the other way around, where a lot of times you have adoption into aluminum, where in fact you're adopting from aluminum into copper.
So the commodity cycle, some people think has bottomed, and gold price and some other commodities are moving. Zinc is higher. Copper's still pretty stagnant at around $2. What do you think is going to be the catalyst to move the price?
For many months, in fact many decades, copper is highly correlated to the price of oil. So if oil goes higher, copper goes higher. That is decoupled as of late. The wrong way. I mean, oil has now rebounded from in the high 20s. It's just pulling up through $50 a barrel. Copper has not participated in that rebound. In fact, we've had a little bit of a correction. We're playing with a new rule book. I don't think we can look at how markets have traded. It is now somewhat hypothecated, copper. The exchanges have now, all the action has shifted from LME to SHFE in Shanghai. So that'll play out, but ultimately, I think many factors, not the least of which will be it's a balanced market, maybe it's an act of God. Maybe there's a problem at a major operation. You always have to remember, only 15 or 16 copper mines give us about 50% of primary copper production. So it's very sensitive to a few operations. If something happens, the market is imbalanced immediately.
Isn't the market oversupplied or close to it for the next few years?
No, I don't believe so. I think it has been maybe a little bit too much supply, but it's not bloated like the aluminum markets or maybe some of the bulks. It's actually quite balanced, in my opinion. If you look at it, decimal point for decimal point, operation for operation, and I follow people like Glencore, Telis, Mystikitas, and sort of some of the research that they do, I don't believe it's overwhelmingly imbalanced. We're talking hundreds of thousands of tons, not millions of tons, in a 23, 24 million ton market. So we've seen some commodities have had a big lift. The lithiums, just if you have lithium in the name, those stocks have sort of had a big run here. Coppers have not really participated in that rebound. Now, I've followed this for many years. I've been investing in copper companies for 15 years, but I've never seen, ever, the value proposition on a per share basis or on a project basis or on a value per pound basis, whatever metric you want to use. Using inflation adjusted metrics, I think this is the cheapest copper market I have ever witnessed in my short, sort of 15, 16 years participating in these markets.
So what are you doing about it?
I'm trying to emulate what has worked for other people, where we're buying now at all-time lows, and we're hoping to create some value for the future as markets rebound. So the Lumina Copper franchise was very successful. What they did is they bought copper projects that were not economic at low and depressed copper prices, which is what we have now. You hold, vehemently protect the value per share, and as the market represents value, be it buy low, sell higher, or if you can raise capital that's not so dilutive, then you can go and tackle work programs that are specific to where the company is. So we're looking to build a vast land bank, and that's what we're doing with Copper Bank.
Tell me a bit about the assets you have so far.
We wanted to choose places that have prolific geology. We wanted to choose places that are overwhelmingly safe. I always use the analogy that they have to be somewhere where I would be happy to send my brother's children to go work. We're not going to go to exotic locations. We looked and we purchased a suite of projects on our IPO, which is a year and a half ago, and we have put a lot of effort into trying to buy more projects. I'll give you some anecdotal information. I have some friends that have made a lot of money in this business. They sold some projects in the past cycle. One such group, they looked at 600 projects around the world. They did not buy anything, Tommy.
In copper?
Copper and gold. It's very hard to buy if you want prolific geology, if you want safe jurisdiction, if you want somewhere you don't have to educate the industry in general to eventually, with the right price of that commodity, have an operation. So we started with what I think are two of the very best jurisdictions in the world, in fact. We have a vast land package in Alaska, and we're in Nevada, Elko County, Nevada, with two entirely different opportunities for our shareholders.
What are the specifics of those projects?
The project that we bought in Nevada was, it's a copper oxide project. We own the land, so for the majority of that project is on private property. The group that owned it before us, they worked for 30 years. They drilled that project. It has about 90,000 meters drilled on it. They bought the land. They did a pre-feasibility study. It would take approximately, in a contemporary sense, probably about $40 million to duplicate the work that has taken place on that project. It's there. We bought the whole package, including a ton of prospective land about 1.5 kilometers due west of the principal project, which we've just now released results that they were put out in 2012 by the predecessor company, where their grab samples at surface were returning between 1 and 12% copper. A fantastic joint venture opportunity for a partner, or perhaps we'll look at doing a modest 10 or 20 hole program ourselves to enhance the value of the principal project, which we admittedly, it's a tier 2 project. It needs higher copper prices to make sense, but look at the value, look at the market cap of the company.
High-grade copper at surface, lots of work done, and PFS.
In one of the best states in the world to do that business, in arguably one of the best counties, on private property with highway water roads. Ironically enough, this was a historic mining district. The Contact Mining District was in operation from 1909 to the 1940s. They mined it for 30 years, Utah copper, and that is what we own, all of it. This is not your standard checkerboard or non-contiguous. This is 5,900 acres in northeast Nevada. We're very happy to have access to this project, and people need to look at the details, not just of the feasibility level project, which needs stronger economics, but that only 1.5 kilometers west of that project, and look at the opportunity there.
What about Alaska? It's the pyramid, I think, right?
Yeah, Alaska is a different type of project because of the scale. Alaska, geologically speaking, is nectar for geologists. This is prolific geology. Now, why do we like this land package? This was work that was moved forward by predecessor company Full Metal Minerals and my partner Rob McLeod and Antofagasta. This project's on tidewater. It's 15 kilometers by 8 kilometers. They did 2 passes of drilling. They earned into the project. They spent $8 million US to satisfy the joint venture agreement. This is a very cost-effective option for Copperbank. We pay $60,000 a year for a tenement that's 15 by 8 kilometers, Tommy. We have an opportunity 7 kilometers east of Pyramid. It's called San Diego Bay. So we are progressively moving that opportunity forward with our partner. Our project is situated on Aleut Corporation lands. They're a progressive native corporation that are encouraging sort of the development of this type of industry. It's on tidewater. It is an extremely interesting prospect. Very close to Pebble. It's in the Ring of Fire, with the Pyramid deposit already defined, open almost in every direction, and this option costs us $60,000 a year, Tommy. The money's been spent. We do not have to dilute our shareholders in the as we try to enhance value with a potential joint venture on either one of the 2 projects.
Is there anything else in the portfolio now?
We're still looking to buy, but we, in the absence of having a hard time buying projects, what do we do as management? We believe that we have undervalued assets. So what do? We don't cry in our beer, Tommy. We buy our own stock. We had the most insider buying of any listed company in Canada in the past 15 months. Month after month, we continue to buy. The market cap of Copperbank is $5 million. I've been a consistent buyer. I continue to buy. We own so much of this company, which is a little bit different than perhaps other situations. That's shareholder money. We throw pennies around like manhole covers. We do not want dilution. Dilution is not the value proposition here. People ask me, what do I obtain? If I buy a share in Copperbank, I give them the value proposition. You get this, this, and this. But more importantly, I tell them 2 years from now, you're still going to have something of that value. The only way we issue shares is if it's accretive to the company, meaning we're getting more pounds per share. And so there's bona fide shareholder protection there because we are the largest shareholders of the company.
Who's your team?
We do not have the burden of having geologists and engineers and expensive CFOs because we're not managing big budgets. But I do have a sophisticated group of well-respected people. Rob McLeod, I think, is well known to the industry. He's my geological partner. I have Ken Cunningham, who is the ex-president of the Geological Society in Nevada. He lives out of Reno, Nevada, so he just joined our board. I have Terry Ortzland, the well-known mining engineer out of Montreal. He's a strategic advisor to the company. Bill Willoughby, who worked Contact in Nevada Forward. We still use him as a consultant, him and his team. Now, where they're not employees of the company, but they are willing and able to assist us as we move that forward. That geological brain trust is still there. All the while, we don't have a big burn rate. So I recently raised $300,000 only because that's all the money we need for 2 years, Tommy. That's it. It keeps the entire structure intact, and it enables me to vehemently protect the value per share. And of course, I'm speaking for myself. I'm the single largest shareholder of the company.
You have a lot of significant shareholders. I know some of them. And I also know that the strategy to keep costs low involves not getting too much work done because work's expensive and the market isn't paying for it. So if Copperbank has to exist in a news vacuum, how can you make shareholders, potential shareholders, excited about what you're doing?
We've had the support of some very sophisticated, patient, long-term, fundamental copper investors. And we don't go bandying around and say that this tycoon and that tycoon is invested in the company, but the support is there. The news vacuum. Well, we want to address that because the buy and hold is, fundamentally I think it's a good business, but we have so much potential on our projects that you'll see now that we're starting to highlight that potential. We just did a corporate update in Nevada. We're open for business. Maybe we want to drill that potential 1.5 kilometers west of contact. Maybe someone out there wants to take a look at that geological opportunity. We are now doing an introduction and an education with our Alaska portfolio. And I've recently been on some trips with the CEO of the Aleut Corporation to highlight the geological opportunity, fundamentally, geologically, commercially, land use. What is the overall idea there? So we are looking at enhancing a potential joint venture in the Alaska portfolio, in the Nevada portfolio, and there's also a royalty opportunity. Our Contact project, which is at the pre-feasibility level, has, for effect, no royalty. What's that worth to Copperbank shareholders, and what can we do to enhance the value? Do we want to maybe spin that out into a different entity called a royalty company? We're looking at that, and maybe there's people that want to look at acquiring that royalty from us. So we're looking at all avenues. So we're going to have 5 pillars. The joint venture opportunity Alaska, Nevada, enhancing the principal projects, and this royalty opportunity. All the while, we're still looking to buy more projects, long as they're in areas that have this sort of, like, as I say, prolific geological potential.
If there's one takeaway to leave on copper and Copperbank, what is it?
Copperbank is, in many ways, it's also an educational tool. If people go to the Energy Zone at copperbankcorp.com, you can lose yourself for hours in really interesting videos on fundamentally how is energy changing, which is, I keep telling people, it's electricity and how copper is going to play a pivotal role there. As far as Copperbank is concerned, this is a unique company because it was a company built by shareholders for shareholders. You can download the fact sheet on Copperbank's website, and I think that probably lists in 2 minutes, one can read that fact sheet and understand fundamentally how our hearts beat and how we're moving the company forward, and how we try to have shareholder value with our current market cap, which is about $6 million.
Any closing thoughts, Gianni?
Well, I want to thank you for the interview, Tommy. This is long overdue. I know that you followed the story since our IPO some 18 months ago, and to thank you, I have a pure copper pen for you from my friends at the Copper Alliance that do tons of great work on
well, you
educating
love copper
people
and
on.
I love to write. Actually, we both do. Thank you very much for the pen, Gianni, and great to see you.
Thank you.
And we'll be watching Copperbank close.
Thank you so much. Use it in good health.